All right, we have the latest short interest figures out for stocks and utilities topping the list there. Let's first explain what short interest figures are, just so everyone who's watching knows. People are betting the stock will go down by borrowing the shares and selling them.
Absolutely right. It's real simple. If you want to bet the stock's going down, you call your broker, you get a borrow, you then short the stock, and of course that amount that is shorted is tracked by the New York Stock Exchange as well as the NASDAQ, and those figures come out every 2 weeks. So they're pretty up to date. You can keep a pretty close tab on who's doing what. The numbers came out last night, and utilities were number 1 in terms of percentage gainers on the short list. In other words, traders making bets against shorts. As a matter of fact, they were up at, in some cases, more than 50%.
So it says basically that traders think utilities are going to go down at least more than any of the other sectors.
Yeah, that's right. They were the biggest gain. And by the way, even more than healthcare, which is pretty interesting because, healthcare has sort of gotten so much negative press recently.
You know what, before we get to which stocks are being shorted, I'm going to throw the script a little out of order here. Why are they betting that on utilities?
Yeah, there are really 3 reasons. Number 1, utilities are particularly rate sensitive. They issue a lot of bonds, and they do that to fund their CapEx, and they're able to do that because they have all these assets. So they're effectively securing the bonds with their assets. So rate sensitive. Number 1. Number 2, cap and trade. Now, we actually did speak to a couple analysts who said, well, look, today some of these utilities are up, and they're up big because of the Republican talk on the Hill about increasing nuclear power. But remember, the Republicans are the minority, so the likelihood of that going through is not good. So longer term, people say cap and trade.
It's been a long time since someone's opened a nuclear power plant in this country.
A very long time, decades. So longer term, you have a cap and trade issue. And of course, by
regulation.
Yeah, more regulation, and they create these carbon credits, and the utilities have to go out and buy the carbon credits, and that adds to their cost. Okay, reason to short. Number 3.
We got number 3. That was regulation. Number 3 was regulation.
Well, no. There's some. Well, cap and trade is number 2. Regulation is a whole other thing. What they want to do is convert from being regulated in terms of their rates to more market sensitive, so they could move rates. And this comes out of the commodity boom, where effectively oil and gas ran up, and they couldn't charge higher rates, so they missed the boat. They want to become merchants, and that would make their earnings less stable and their dividends lower. In theory, another reason to short.
Let's quickly list the ones that got hit the hardest as far as the short interests are concerned.
Yeah, First Energy, FE, up 64% in 2 weeks. RRI up 60%. Allegheny, 52%. Great Plains up 45%. These are huge increases, and just in 2 weeks, this is where guys are betting against.
All right, Adam, very interesting checking short interest. That's always a cool thing to look at. Thanks for coming on and doing that.